Dude, what a crazy time.
I know. It's
I'm glad we waited until after the election. It's a way more interesting period in the market.
yeah, ton more to talk about, and happy we finally could do this because I feel like we've known about each other for quite a bit of time. Both went to Fordham, but I don't think we've actually ever met. So
Yeah, well, were you at the Rose Hill campus?
I was at Rosedale, yeah.
Okay. Yeah, we would have I wouldn't be surprised if we probably were within like feet of each other multiple times without really knowing it.
Yeah, for sure. Were you in the business school or something
No,
else?
but what was funny was I actually lived in the Bronx for like 2 years after college, and I would literally like work at a Gabelli when I was starting the block, like out of the business school, like where they have the terminals, and I'd like work at a Bloomberg, which was really fun when we started the company because like I would have all the charts and data. That was back in like 2018, so it was kind of like a little bit of a flex.
Yeah, yeah. No, that's funny. I mean, we probably did. You're right. Like probably just like passed by each other at some point.
Yeah. Well, ladies and gentlemen, thanks so much for tuning into The Scoop. I'm your host, Frank Chaparro, Director of Special Projects at The Block, and I'm very excited. You can hear him on the other side of the mic, Ryan Watkins. This is yeah, like he sort of alluded to. I mean, this was kind of a long time coming. For folks, since this is your first appearance, hopefully not your last, walk us through your journey into crypto and what sparked your initial interest, and tell us a little bit about the fund.
Yeah, sure. The first time I came across Bitcoin was in 2014. I was in high school. One of my friends was using the Silk Road, and that's how I came across it. Didn't really have that much interest in it, didn't really see the use case, so pushed it to the side and didn't really come back to it until 2016 when I was in college. I just so happened to meet someone on my campus who was starting a cryptocurrency club, and they had 2 free tickets to go to Consensus. So went there. That was peak of the enterprise blockchain hype, so still didn't quite get in. So it wasn't really until 2017 when I really caught that bug and became obsessed with it. And after that, I pretty much never looked back. But I still went into investment banking when I got out of college. And then when the market was kind of springing back to life in 2019, that's when I went full time into crypto in middle of 2019 at Masari. So that's the crypto journey, and then the fund. So started in the middle of 2022, about 5 days before Terra collapsed. That's how I always like think about when it happened. And
Well, Do Kwon was on the cap table, wasn't he?
so he originally was going to be, but he never ended up investing in the fund. So we did not. He's not on the cap table.
I see. Yeah, 5 days before Terra Luna collapsed. That would have been harrowing.
Yeah, it was. But it ended up being good timing because as we were fundraising, we basically communicated with our investors that we didn't think the market was investable at the current moment, and that we could potentially hold cash for the first 6 to 12 months. And once that happened, that pretty much validated our point of view, and it made it easier to hold cash for the first 6 to 12 months, which we did. And it ended up being good because we dodged a lot of the crazy stuff that happened during that period, like Terra, 3AC, FTX, and slowly started to get deployed over 2023 once that mess was behind us.
It's good that your LPs had a degree of patience to bear with you during those 6 months. I feel like now we're in like almost the opposite environment where funds are probably trying to deploy all the cash that they have in 6 to 12 months versus sitting and waiting on their hands, as it were. What was that time like? It must have been a little boring.
Although we weren't fully invested, it wasn't necessarily a boring time because there was a ton that was happening in the industry. So for one, you had all these big collapses, and while it is chaotic and stressful, it does teach you lessons about what works and what doesn't. So for example, Terra was a big lesson for people that these algorithm stablecoins don't work. And that is, I think, really interesting and for us to all figure out together. And then another thing that was really interesting at that time as well is that we started to see the early signs of real winners emerging in select categories. And that became very exciting because as the market unwound throughout that year, you had the opportunity to buy many of these assets down 80, 90% from the highs. And these are projects that could be the next banks in the crypto economy. This generational winners that could compound for years to come if you're right and pick the right name. So yeah, it definitely wasn't a time where we were active investing, but it was definitely a time we were very active doing research.
Was that part of the shift in Syncracy's model from kind of more of a hedge fund liquid strategy to, it sounds like when we spoke a few weeks ago, that it's like almost mostly venture with a little bit of liquid?
Oh no, it's only liquid. So we will do.
Oh, it's only liquid. Okay.
Yeah, it's only liquid. So we will do some private deals from time to
That's
time.
right. Other way around. My apologies. You were telling me that there's only a little bit of a venture component and it's mostly liquid.
Exactly. But I wouldn't even say it's a venture component. It's more just like, if we can buy an asset for a discount and there's a favorable vesting schedule that makes sense with the fund, like our liquidity preferences, then we will do that. But yeah, it's pretty much all liquid tokens.
Okay. Well, that makes a lot of sense. If anybody follows you, like, you definitely have the mind, an approach as a trader versus, you follow a VC, and they're a bit more like lofty, and they're sort of like in their tweets. Not that we love having VCs on the show, but in a market dynamic like this, it's definitely more helpful to have someone with a sort of more liquid approach talking about everything that's happening, right? So let's get into that. We can do some crypto market analysis. Given recent fluctuations, you can call them, in the wake of Donald Trump's victory, were you surprised at the extent to which the market embraced his win?
Honestly, no, because so I remember we wrote a letter to our investors right before the election, just kind of outlining our view. And the way that we saw it is that with Bitcoin and the rest of the asset class really starting to sell off into election, we felt that a lot of the downside was priced in, and that basically the setup was that if Kamala won, we would be in a regulatory environment that at the very least would not be worse than it was under Biden. She had really at least communicated that she was willing to embrace the asset class more, and potentially even make changes to the SEC. And then the upside was that you get Trump winning, potentially even a red sweep, and that would mean that not only do we get a complete paradigm shift in the regulatory landscape in America, but there's also this potential to get a Bitcoin strategic reserve. And the strategic reserve part, whether it was a 10, 20, 30% chance of happening, the fact that it's on the table means that there's going to be a lot of other government and government agencies around the world that have to start paying attention and question, should we be thinking about doing this as well? And that, I think, would create like a big kind of global accumulation race for Bitcoin that obviously wasn't priced in when Bitcoin's at 66K before the election. So that's how we kind of saw it heading into election. And did I expect that we'd go to 90K in 2 weeks? That I don't think I caught me off guard. But yeah, I'm not surprised that everyone's excited.
Well, there's one corner of the market that folks would have wished performed in line with Bitcoin, and that's Ethereum. Yeah. It sits in almost like a no man's land, where the long tail of crypto assets are doing really well. Bitcoin's doing really well. What's your thinking around ETH right now? Is it as basic as, like, with Bitcoin, right? You have all of these potentialities that could be massive unlocks. Like, I think even Pennsylvania was talking about a strategic Bitcoin reserve. It's more investable it's an investable asset for nation states. I mean, that's where we are. And no other crypto asset has that. While it's at the same time, something like Solana and across the long tail, they have, all of these capital market opportunities, like, ETFs haven't come online, et cetera. Whereas ETH is in this uncomfy sort of middle territory where it is an institutional asset, but it's already sort of gone through that journey. It has the derivatives, it has the ETFs, but it's not something that nation states are looking to invest in. Is that how? That's how I would sort of describe it. But I'm curious what your thoughts are on ETH underperforming. I think if Bitcoin's up 100% this year, ETH's what is it, 40 or 30 or something like that?
Yeah, I think that I'll divide it up into the fundamental lens and then the narrative lens. And I'll start with the narrative lens. One of the challenges Ethereum has is there is not a cohesive story for what the asset is and how the platform is competing. So when you look at ETH, the asset, it's not clear, is this an equity like asset, in which case we should be valuing it on cash flows? And if we are doing that, then the problem is that Ethereum's fees have collapsed 90% over the past year as activity has shifted to all the rollups. And if that is how we're going to scale Ethereum, by pushing this execution of rollups, and as a result, get more activity, but while fees come down on mainnet, then that is not a good thing if you're going to value Ethereum as a equity-like business, because fees are going lower even though activity is going higher, right? Now, on the other hand, you could value Ethereum like it's this commodity money-like asset like Bitcoin, right? And that would make sense because before the proof of stake merge, that's exactly how people thought of Ethereum, right? It was like Bitcoin with smart contracts, and there wasn't any sense that you would capture any fees as an ETH holder because all the fees that people paid to transact went to miners. So Ethereum, ETH was just this asset. It was just like Bitcoin, just another proof of work asset that was going to miners, and it's this monetary-like asset. Now, what is ETH actually? It doesn't even matter because the fact that matter is that the narrative is just so complicated on what the asset is. So you can't position it against Bitcoin and say, oh, this is another digital gold because people don't buy into a story. And then if you can't, people don't buy into a story that it's this equity-like asset because it looks like the business is dying because the fees are collapsing. So that's the narrative lens. And then the fundamental lens is that, well, let's just say you're just looking at on-chain activity for Ethereum. It is growing, but is it enough to justify the valuation? And is it enough to justify the valuation versus all the competitors? So the elephant in the room is that Solana is taking market share from Ethereum and it's growing significantly faster and it trades at a third of the valuation. And why would you want to bid the asset that is, I think at this point, fairly clearly over expensive relative to the upstart that's taking all the market share and getting faster growth? It's a challenging place. So
how much do you think unit bias kind of plays a role in that?
I don't think unit bias makes a big difference because it's not like Bitcoin is underperforming because it's like a fat ticket price, right?
Yeah. I tweeted the other day as a joke. I was like, wait till the Zoomers find out you don't need to buy an entire Bitcoin.
Yeah.
So it's long only, right? So what sort of underpins your thesis in terms of like putting on positions for different coins? How do you break down the landscape?
Yeah, so we're long bias. We never go net short, but from time to time we can use derivatives to hedge. For us, it's very similar to like a hedge fund in equities. We have this process where we start either, we're not dogmatic about whether it's tops down or bottoms up. We just want to identify what we believe could be these big generational winners in the asset class. And we run very concentrated. So we hold a very small number of positions. And it's a combination of both a qualitative thesis that there are very few winners in this asset class at this moment in time, and we want to be concentrated into those winners because we think that they're going to compound at a very fast rate and achieve these large outcomes very fast. And we already have some proof points in projects like Bitcoin, Ethereum. Ethereum's a $400 billion asset, and it grew to that amount in a matter of 5-6 years,
Yeah.
right? Same thing with Solana. Solana is a $100 billion asset. Mainnet went live in 2020. It's been 4 years. Mm-hmm. It's a $100 billion asset. It's crazy how fast these projects can grow. And I don't think that Solana is the last. There will be more projects that have these big generation outcomes if you can identify them. So that's kind of the more qualitative view. And then the more quantitative view is that When we run the numbers, and let's say you're comparing this to equities, where at what point do you start to get diminishing marginal returns to diversifying? As in, like, you actually reduce the amount of risk in your portfolio. It's maybe around, like, I don't know, say 40 assets in your portfolio. In crypto, it's probably around like 15. And the reason why is because all these assets are so correlated that the second you get beyond 15 assets, you're not really diversifying away any more risk. You're just
I see.
filling your portfolio with a bunch of projects that you may not want to own.
That's a really good point. So what sort of how do you separate the wheat from the chaff in the long tail of assets?
Yeah, I mean, we have like a set of questions that we ask to make sure that we're buying the right assets, right? So we always, so one thing you mentioned earlier is that we're a liquid fund, and we maybe aren't as like lofty in how we're thinking about everything as a venture fund. I think it's important to keep a balance, because what we've realized is that you can't be purely fundamental in this market.
Mm-hmm.
Otherwise, you're probably going to get stuck in fundamental DeFi, for example, that hasn't done well. And you probably can't be purely narrative based, because then you run into the scenarios where you buy something that is this complete vaporware, and you kind of get screwed.
Yeah, you get caught up in the cycle of the moment, like whether it's AI coins or meme coins, or whatever have you. That sort of, you can really that can really turn against you very quickly.
Exactly. So you really need a marriage of these two, the fundamentals and the narrative, and that's where we tend to spend most of our time. So, for example, there are some more bottoms up ways of doing this. So for Solana, where we have this very fundamental view on why we think that this is a competitive platform to Ethereum, and we did all this technical diligence to figure out that, okay, you know what, this is legit. The reason why Solana is capable of achieving higher throughput is not just because it's this centralized thing and they're jacking up the hardware requirements. It's actually because there's legitimate innovation in how Solana is propagating transactions around the network, and how they're doing parallel execution, like all these different things that we realize are legit. And then there's also this more narrative lens where, well, what's great about these smart contract platforms is they have really favorable comps. So at the time, Solana was trading at 5% of Ethereum's valuation. And
when you put out this report,
well, not when we put out the report. We put that report out the first time, like maybe like 6 months after we bought the position. But at the time, It was, I don't know, like maybe 5% of Ethereum's market capitalization. So it was very easy to underwrite, these returns on a relative basis, and that's more of like a narrative lens. Now, in contrast, there are ones where they're more narrative based. So we are very excited about this intersection of AI and blockchain. It's very early stage. Mm-hmm. It reminds me of DeFi in 2019, 2020, where many of these projects are somewhat clunky, kind of very rudimentary examples of how do we do finance on chain. And now it's kind of the same thing, very rudimentary examples of how do we do AI on chain, or how do we use decentralized protocols to enhance AI services off chain. But I do think that there's a kernel of truth in this sector. And how do we actually express the thesis? Well, we just want to find what is the biggest idea here. And for us, that was BitTensor. And what is interesting about that? Well, it is actually this platform play on the AI sector. So the basic idea is, what if we were to reimagine how block rewards work in a blockchain, and instead of allocating all the rewards just to miners, what if instead we allocated some rewards to other valuable digital commodities? So maybe we want to allocate rewards to people who are supplying GPUs. Maybe we want to allocate rewards to people who are doing scraping data off the internet. Maybe you want to supply rewards to people who are building open source models, right? And before you know it, you actually have all these resources aggregated under one hood that can be deployed towards a single purpose of creating AI applications and infrastructure in the crypto economy. And that's very exciting. And there's individual subnets that actually have just as much traction as multi-billion-dollar projects that are independent. So there's a good anecdote that Sammy, who is at OSS, put out the other day, where he said that one of the subnets for BitTensor has as much NVIDIA H100s as one of the large AI DPINs, which was, I think, IO, right? I think it was like 900 H100s versus 500
Wow.
for BitTensor, and that's just one subnet. And there are many other subnets that also have these mass supplies of GPUs as well. So all to say, and this is kind of like an anecdote about what are we looking for? We're looking for these like big platform like ideas where if we're right, this can be another Bitcoin, Ethereum, Solana like outcome.
Drop the ticker in the chat. Let's maybe focus in on Solana for a second. I think you tweeted the other day, or it's your pin tweet. Solana is at like 33% of the value of ETH right now, but is basically catching up on most metrics that are important. Maybe break that down for us.
Yeah, sure. So about a year ago, we put out our public thesis on Solana, and that thesis was more about the potential of Solana, because at the time, the data was still emerging, right? So in order to make an effective argument for Solana, you basically needed to prove out Solana on its technical merits, why it's faster, cheaper, why you can build more scalable applications, why the user experience will be better, right? And that's basically what we communicated in that original thesis. The difference today is that beyond the obvious of Solana being significantly higher and more people being believers, is that you no longer need to make the Solana thesis, the Solana argument, purely on the basis of its technical merits versus the field. You can make the argument now purely with the data. And then you can use the data to make an argument about how, or you can contextualize the data, with how this can create really powerful network effects for Solana moving forward that might actually outweigh any technical advantages it has over anyone else. So when we put together the thesis, all we were doing is just pulling the data, putting in a chart so that it's understandable, and then contextualizing it for people so that everyone understands just what is actually happening here, because this is no longer opinion of what we think is cooler or better. It's literally just the facts. And if you look at all these metrics, whether it be DEX volumes, stablecoin volumes, active addresses, transactions, real economic value, which is just basically just transaction fees and MEV. If you look at the total revenue of all the applications on Solana and compare that to the total revenue of application of Ethereum, even that is starting to surpass it. Across all these different metrics, Solana is now either at par or surpassing Ethereum on these metrics. And the story is the same, even if you include the L2s as well. So it's not like, oh, we're just forgetting about all of these, all the
economic value accruing on layer 2s.
It's the same exact story as well.
So what does that tell you about current valuations? How much of can you get a sense of how much of a relative discount Solana's trading based on that? Like, are you suggesting that from a price perspective, Solana should be at 1,000, and then I don't have to do this podcast anymore?
Yeah, listen, I think for us, we are very confident this gap is going to close. And the only metrics that Ethereum leads on right now, the way it divided up is into stocks versus flows. So remember how in 2020 there was that stock to flow guy, and he talks about how the stock to flow for Bitcoin is going down below gold. So basically, what stocks and flows are is the stock is just like just like a snap. It's like a snapshot. It's like how many assets are just sitting here, and the flows are just they talk about the direction, the flows of the assets. So flow-based metrics to me are things like volumes, right? They're telling you like the activity and how it's trending. Stock-based metrics are just like, all right, how many assets are sitting here? Ethereum leads in all the stock metrics still. So if you think about total value locked, if you think about stablecoin supply, that's where Ethereum still leads. And why does it still lead in those metrics beyond the fact that it was just first? Well, I think it's twofold. One is there, at least until maybe the election, this regulatory advantage that Ethereum had over Solana, where it was the only asset that had the institutional stamp of approval and that it had an ETF.
Yeah.
Right. Two, it is this perceived sense of trustworthiness, and that is a product of Ethereum's track record and its decentralization. The track record is the fact that Ethereum's been running for a very long time and has had no downtimes, like no major hacks, at least in 2016, which is DAO hack. And then the decentralization is the fact that there are, 7,000, 8,000 full nodes around the world that are independent and verifying the state of Ethereum. And it's politically decentralized as well, where it's this grassroots community of developers that are all working together. It's chaotic, it's slow, it takes a lot of deliberation to put through changes on Ethereum, but the benefit is that this is a provably decentralized.
There's a degree of stability.
And I think that provides a lot of trust in storing your assets on Ethereum, because it's not going to change, or there's not going to be like dramatic changes as if it was just kind of like more of a move fast and break things mentality. Now, where has this changed? Well, if you think about that regulatory advantage, I don't know if that exists anymore with the new administration and potentially more favorable Congress as well, where you won't actually have Ethereum being only the asset that has the institutional stamp of approval moving forward. So I think that's no longer an advantage. Track record, function of time, right? Can't change that. You just need to continue to have this go. Decentralization, I think that's actually less of an advantage for Ethereum than people think, because Solana already has 47%, basically half the amount of full nodes as Ethereum. And the cost to run one of those nodes is $4,000 more per year. Now, is that egregiously more? No, it's not like this is $100,000 to run and it costs $50 to run the Ethereum node on a Raspberry Pi. I mean, this is a small gap. So I think that over time, this perceived sense of trustworthiness will start to matter less for Ethereum versus Solana when people realize this gap is smaller than we think. And then that's when you start to see those final metrics, the more stock-based metrics, like total value locked and stable supply, start to catch up to Ethereum. And at that point, well, what is the argument for why Ethereum trades so much higher than Ethereum? I think the argument is very weak. And in my eyes, it's not like I'm bearish on Ethereum. It's just that I believe these should trade more like peers.
Yeah.
Right.
One thing that I think kind of holds the space back is Bitcoin in a sense. Like, I've always thought that, like, if in some world another token were to surpass it at this rate, doesn't look like it'll be Ethereum, then it kind of like it like basically the ceiling breaks from a price perspective. Now, to a lesser extent, I do wonder if Solana were ever to flip Ethereum, what that means in terms of like how high other coins can go. I don't think it'll be as significant as if something were to flip Bitcoin. Then I think, all cards are off the table in terms of like pure froth and craziness. But I wonder what a flippening, or at least like them sort of trading more in parallel, will mean for the longer tail.
Yeah. I'll start with that first point you made about, actually, I'll start with the second point around the long tail versus Ethereum, Solana, and then I'll talk about the Bitcoin one. So I think that parity between Solana and Ethereum it'd be good for the rest of the asset class, because it proves that if you build a better product, you'll be rewarded for it. And it's not this case where just because you're first, you automatically become the best and you're untouchable. That doesn't make any sense. And I mean, especially because at least for the smart contract platforms, they are competing on the basis of the product that they offer to the world. And that usually means you have to be more scalable, you have to be more performant because you are a foundation for applications, right? Now, this is slightly reductive, but I think almost every use case for this technology is derivative of moving assets around, swapping, sending, exchanging, mapping the relationship between two assets and enforcing some contractual agreements. It's basically all DeFi is. That is what blockchains do. And if you can do that better than another system, then you're probably a better foundation for the financial system than the other. Now, that doesn't mean that none of these systems have network effects, right? So I don't think that just because someone comes along and they're 2x better than Ethereum or Solana, that they will automatically be number one. But if someone comes along and offers something 2x better, then yeah, you know what? They probably have a chance at breaking whatever network effects those two have. Now, going back to Bitcoin versus the field, there's part of me that empathizes with that view that if Bitcoin were to be flipped, that would break something in the psychology of every investor where they're like, all right, you know what? Maybe this is not as investable as I thought because it's just this game of technology. And if money is going to be this game of technology where if someone creates a better one, all of a sudden this multi-trillion dollar asset just collapses in value and a new one comes up. You can't build a monetary system based on this. I mean, no one's going to want to store value in this stuff. It's ridiculous. That being said, I am on the belief on a long enough horizon, I'm not sure if this happens within the next decade, that one of these smart contract platforms will surpass Bitcoin. And for me, the insight here is that there is not much intrinsically different about Bitcoin versus any smart contract platform. The base asset of these systems is a cryptographically secured crypto asset, right? It has a programmatic supply schedule. It can be sent around the world easily, and the entire system is verifiable by the end user. I mean, they're practically the same thing. And you can always see this in how people are attempting to build rollups on top of a Bitcoin. It's in a way proving out the point that we need to build applications that can natively access this base asset so that it can be used as currency within the digital economy. So, in a long enough horizon, I do think they all look the same. And the one that wins is the one that can onboard the most users that want to hold the asset. And I think my sense is that the best way of achieving that is, yeah, it potentially could be this digital gold where you just convince a bunch of gold holders to hold Bitcoin instead. But another way is you just convince people to use a bunch of really cool applications that are being built on your platform and people just want to hold it over time, right? So if there are a lot of people that start earning money on chain because they're providing they're supplying resources to a DePIN protocol, right? Or they're earning money from a DAO because they're contributing their time to it, and they're just holding these assets on chain. Well, then at a certain point, that becomes their money, right? They're getting paid in this stuff, and they're storing the assets on chain, and they're doing stuff with those assets on chain. They're saving it, and they're lending it out, and all that. And I think that's how you grow a native digital economy that way. Now, that's obviously more futuristic, way more ambitious than just saying
that's you're starting to sound more like a VC.
Yeah. So you always got to balance it out with what is the current state of things today, right? But that's how I think about it long term.
Well, let's think about what's going on today. How do you think about our timing in the cycle, and what indicators do you look for in terms of is this rally just getting started? What sort of signals do you look for to determine that?
Yeah. So I'm not sure how much I believe in the 4-year cycle theory. I think it's coincidental more than anything that we happen to go up within the 4 years after each halving. And I start to wonder if the market structure is changing with the presence of institutional investors. And everyone in the world is basically in this process of getting off zero now. And my sense is that volatility will compress for Bitcoin over time. In fact, I think we can observe that empirically that volatility is compressing over time for Bitcoin. So will we get to a world where Bitcoin's going to go down 80, 90% in a bear market again? I'm not sure. And what does that do?
It's well, I mean, this goes to the ETFs, right? We had Flowdesk on the show, and they described the sort of the coming online of spot ETFs as like this, up only multi-generational TWAP, something like that, which I thought was quite funny. But you kind of see it right over the weekend. Bitcoin rises, and then it's sort of with the ETFs, and then it gaps up, and then it's kind of like this almost reinforcing process. And so, yeah, of course, like to your point, like in something like that, in a setup like that, you can have drawdowns, but it's really hard to imagine a 30%, 40% drawdown.
Yeah, well, I think we still get like a 30% drawdown. We had one over the summer for Bitcoin. It fell from 674K to around like 40, like mid 40s at one point. But all to say, I created this chart over the summer that shows it's like the classic Gartner hype cycle for technology. Mm-hmm. And Bitcoin is what is called like on the platform, the plateau of productivity. And the way to think about this is it's now at a stage in its life cycle and its maturation where it is basically just compounding growth. Now, what does that mean for an asset whose only function is really to go up? I mean, it just means that we're now at a place where everyone in the world is starting to get off zero and it's starting to get more widely adopted. And that is a structural trend for the next decade or longer, right? So Bitcoin, I think, is in compounding. It's at its compounding growth stage. The rest of the asset class, I'm not convinced is there yet. You have early signs of this in stablecoins, where they're entering this compounding growth stage, but they may be a little bit behind Bitcoin as far as being along the adoption curve. But then everything else is still on the slope of enlightenment, where people are still skeptical that DeFi, DePIN is truly going to work. Now, of course, this is the opportunity because disbelievers are buyers in the future. But there's a reason why people.
I like that. I'm gonna write that down.
Yeah, I mean it's true, right? Like all the people that were hating before, they show up later to buy once it's clear. And I think what the rest of the asset class needs to prove is that it can grow non-cyclically. Mm-hmm. So, of course, when Bitcoin, Ethereum, Solana, when prices are rising, DeFi can grow. But what happens when prices collapse? It's just always going to go straight down. And that's not to say that finance isn't always just going to be a cyclical industry. Of course it is. But I mean,
no. But the point you're making is something that I find very interesting. It's like, when will there be a, let's say, 80% drawdown in Solana that's not 100% mirrored by an 80% drawdown in usage? When will it sort of maybe be
exactly
a 60% drawdown in usage underpinned by an 80% drawdown in price?
Exactly. So when we talk about this 4-year cycle theory, or like where we are in the cycle, I think it's important to bifurcate Bitcoin, stablecoins, and the rest of the asset class. So we could be in this world where Bitcoin is continuously grinding higher, and yes, still has these 30, 40% pullbacks. But for the rest of the asset class, when Bitcoin pulls at 30, 40%, these things just go down 80% because it's just this cyclical game of musical chairs. And there will be some select outliers that can transcend the cyclicality and prove that they are these long-term winners. I think Solana is a good example of one asset that has achieved that over the past year and basically stood out from the crowd as one of the few assets that has meaningfully outperformed Bitcoin and held its gains and is making new highs. But for a lot of other assets, they're just constantly in this game of, okay, Bitcoin's going up, we go up, Bitcoin goes down, we go down way more. And how is that going to change? Well, and this maybe gets a little bit into this meme coin nihilism thesis. Why are people bidding meme coins in the first place? So there is some sense that people are bidding meme coins because it's this revolt against the venture capitalist. There's some truth to it, but I don't fully agree with it. Right? I don't think that's the reason why people are bidding meme coins. I think the more compelling reason why people are bidding meme coins is because a lot of the real projects in DeFi and DePIN are quite frankly just overvalued. And of course, you can find select outliers that are actually priced attractively and are growing very well, and you can justify those valuations, but categorically, they are expensive. So if I'm a retail investor, why would I want to buy a $2 billion DeFi protocol that is not actually compounding growth, is trading at 50 times forward revenue, when I could buy a meme coin and I have hopes of making 100x? Now, of course, this is not what might actually happen. We did this work on pump.fun, and you cannot observe. I mean, you're probably more likely to get struck by lightning than make $1 million on pump.fun, but people still do it anyways because there's this dream that you can actually make money buying these meme coins. So all to say, I think that a lot of the kind of like DeFi, DePIN projects, once again, as a category, there always are going to be outliers, and that's where the opportunity is right now. But as a category, I think they really need to grow into their valuations before people can get comfortable bidding. And then two, you need a shift in the market structure where the buyer universe changes as well. Because at a certain point, these assets will be very attractive, right? Could it be in the next 6 months? Could be in the next 12 months? Could be today, right? I could be completely wrong about this. And you actually have new investors coming in, maybe pod shops in traditional finance, start setting up these funds. And these people are not going to buy meme coins, right? They just can't tolerate the volatility. They can't take that risk. And
they should.
I mean, for all of our sakes.
Yeah,
but here's the thing. They will be interested in some of these other assets. And you know what? For them, maybe the fact that some DeFi project is going to compound at 30% a year, that's really attractive for them. That's all they need, right? And to be honest, if you can compound at 30% a year for 10 years, that's extraordinary. I mean, people would die to have those returns. But for some reason, everyone here is so delusional that 30% isn't enough. And you need 10x in a month to be happy and to validate your time you're spending in this asset class. So I think, you need, like, once again, projects need to grow into their valuations. And then two, you need a big shift in the buyer universe so that there are people that just want to buy this stuff, right? And until that happens, we probably are in this world where Bitcoin is doing its own thing and everything else is just this cyclical game of musical chairs, and people are just bidding the flavor of the day. And then I guess for the discerning investors, you can pick these outliers that can transcend this cyclicality and this nonsense that is happening everywhere else in crypto.
It'll change as the degenification of the space unfolds. The cycles will change.
Yeah.
Well, Ryan, thank you so much for taking the time.
Yeah, thanks for having me on.
We'll talk to you soon. Where can folks follow you and learn more?
Sure. So you can follow me on Twitter at Ryan Watkins _, and you can find us on Syncracy.io.
Amazing. Thank you.